make a quick video about the recent dump. If you watched my last video that I uploaded, the tutorial on how to draw weekly fibs, you're probably doing hella well right now. As you see, we came straight off a weekly fib, dumped right through, a little resistance at the next one, and we're already headed to the next one on Ethereum at 112. And for Bitcoin, we just fell right through one, and we're currently testing a spider line, and we could possibly get another 15 to 17% down to the next weekly fib at just below 20k. I actually expect 20k to be a pretty heavy resistance, but the weekly fib is basically right there anyways. So, wow, what a dump. Very brutal market. Up here, I had a long in right here with a stop loss pretty close. It was a scalp, so that got stopped out immediately. And we rode the shorts all the way down. And I just closed a bunch of them this morning. We're seeing a lot of this. When you see a lot of yellow X's, that usually means sell pressure is running out. It's dwindling, but we're also seeing them print and confirm on higher time frames, like the 8-hour. So this is significant in not only the wick that it's on, but it sets precedent that we are still bearish. So yeah, it's been a pretty crazy few days. Money flow keeps trying to come deeper. Momentum. This might actually turn into a bullish divergence, maybe. Ugh. You know, it's pretty down there. But I like these prices. So I'm currently stacking DCAing in, which means dollar cost averaging, into my spot positions for Ethereum, Bitcoin. And I'm not going all in until I know it's a bottom. And as we've been seeing with these massive hell step formations, like on the daily, on 4-day, right? With these formations, it's just they're not a bullish formation, right? They can come down and then kind of dwindle before going up. Maybe do like a big dribble. But it's not the same environment like it was, and this could definitely continue lower. It's quite crazy how fast the price falls. If you're looking to enter a trade now, it's a bad time. But obviously, you shouldn't be doing anything other than shorting. Don't catch knives, right? As CryptoFace likes to say, knives are not meant for catching. You don't try to grab a knife as it's falling. And if you do plan on grabbing a knife as it's falling, the only time you should look for that is when it's near an area of very significant resistance. So where you have a very high probability of winning the trade, just based off of psychology, right? So at a weekly fib, at a very heavy number like 20k, that's where you need to have limit orders in with stop losses to catch those knives, and that's your best chance of actually catching a knife, is when you can predict where it's going to touch, right? So if I had a long on this weekly fib at 1422, which I've had here since my last video, this is a new one I drew in the last video, because I didn't like how from this weekly fib to this weekly fib it was 41%. I was like, oh, that's a lot. There's probably one in between. I found one. And look, the price reacted off of it. So boom, if I had a long in there, I would have got, that is what, 9%. So I would have got out a lot of profit, and then even though it came back down, I would have got stopped out in the profit, and that scalp would have worked. And this is going to happen at these lower levels as well. Once we hit this weekly fib, the same thing's probably going to happen. You know, we're going to come up. Maybe we come up a lot. You never know. Or maybe we just dump right through, which is why you have to have your risk management and your protections. But I'm not just going to be like, oh, this is the bottom. There's literally no reason. Sure, we have like some BitBoy green dots, but nothing. Those aren't significant enough to warrant a long, right? So you can see how this was coming up while it was coming down. That's a bullish divergence, and that combined with it touching the weekly fib would have been your entry. So this coming down while it's coming down is not a bullish divergence on this momentum wave. So you gotta wait for, obviously, for it to hit this price and create a bullish divergence for you to feel confident that, especially on the lower time frames, for you to enter a trade like this. This is not a bullish divergence currently, so this is probably just going to get knocked down, which is another indication you can use to maybe run a short. I mean, that's a nice short scalp, 9%. Take your profits down here. Keep riding it down. This was seen coming from a mile away. If we go to Bitcoin chart, go to the 12-hour, look at that. Look at that 12-hour. Look how beautiful that is. Obviously, massive sell step pattern. Even if you didn't know that, look at these trigger wave, right? Look how momentum is coming down. Look how RSI was coming down. Look how RSI was weak. The money flow, yeah, money flow was coming in, but that's not bullish. That's not a bullish indicator because we're in a bear market. That is a bearish indicator because that means we're oversold. We're oversold in the bear market. So when we came up here and we were touching the zero line, it acted as resistance and it just kept going. And look at that. 20%. 20%. Just look at the 4-hour. 4 hours is a time frame I love because look, every single time it comes into the green, there was a move down. Came into the green, move down. Came into the green, move down. It finally came into the red, back into the red, deep in the red. Boom! Right? And don't take these little notches as, this is the 4-hour chart. These notches are like 10% each. 6% here, you know, 8% here, 9%, 11%. These are some big moves, even though it doesn't look like it compared to the massive dumping Armageddon we just had. Sure, but these, you can make a lot of money from these moves. So don't just ignore them, right? You got to figure out how to use low leverage and wait, because these money flow waves took 4 days to complete. And these red waves can take months to complete. So we're going to be going down for probably quite a while. You got to learn how to place a trade, follow the trend, right? Trend, zoom out. This is bearish. I don't know about you, but like, right? It's just going down. So what are we doing? We're shorting. We look for bullish indicators in a bearish trend, and we short the bullish indicators, and we get the tops. That's it. Too simple. Alright, I gotta go. See y'all in the next one.